All right, so hello everybody. Welcome to another free webinar hosted by A1 Trading, which is a very great opportunity for you to improve your trading skills. Now, let us start with today's lesson. I'm going to focus on reading and using candlestick patterns. Right, and then that's the first part. That means in the very first part, I do want to talk about reading and using candlestick patterns. And in the second part, I want to talk about candlestick patterns that occur quite often, but which are usually not read carefully. This is what I would say. I think most people, they open a chart and then they just quickly say, oh, that's a doji, that's this, that's that. This is rather bullish, this is rather bearish, and then that's it. And I'd rather say you really have to observe the market. This is at least what I have learned from my own trading mentor. And if you're interested, you can actually download today's handout. I have uploaded it to my Google Drive, and I have put the link into today's conversation, into the chat box, so you can basically download it if you're interested. Now let's get started. Now, before I do want to clarify the question. People sometimes ask, why do you keep focusing on candlestick patterns? Well, candlestick patterns are the fundament, the very alphabet of technical analysis. Yeah, you have to learn 5 areas or 5 different fields to become a professional day trader. You have to know something about risk management. You need to know something about reading chart patterns, right? This is something important. You need to know something about candlestick patterns, and you need to know something about fundamental analysis as well as trading psychology. And that's the reason why I focus on candlestick patterns, because it is a major area of for day traders. So all right, now to kick off today's lesson, I do want to ask you a question. I'm a lecturer here in Switzerland, and I always start my lessons with asking questions. I know that can be quite stupid sometimes, or students don't like it very much. But now my question to you is, as you can see here, this is GBP USD, this is the daily chart. Now let me ask you a question. Here we have a bullish engulfing pattern right here, the one that I have underlined, yeah, a bullish engulfing pattern, and the same bullish engulfing pattern appears right here, yeah. We have 2 bullish engulfing pattern. We have the same candlestick pattern, but then why do we have different, or why do they both trigger different price directions? Why does that happen? And is this even, can you predict that? I mean, well, the answer is obviously yes, because this is your job as a day trader. Your job as a day trader is not just opening a chart and reading a chart, because anyone can do this, right? It's not about just reading, it's more about being one step ahead and predicting based on what is available to you. Now, back to my question. Can someone tell me, I've got twice a bullish engulfing pattern, the same candlestick, but completely different price reactions. Why? There are a couple of reasons, and I want to read what you have to say about my question first of all. Yes, for example, Ahmed, what would you say, or Abbas? Or anyone else? Different context. All right, very good. Okay, one is different context. I'm very glad that this is mentioned here. All right, different context. What else? First one, minor resistance. Second one, major resistance. You mean the first one is at a minor resistance point, but if it were at a minor resistance point, right, this one is at a minor resistance point and this one is a major. Is this what you're saying? Is that right? Did I get you right? Yeah. Okay, anyway, what else? Okay. Now, what you are telling me is you give me information about, you say things like it's a different context, you talk about support and resistance, and this is, I mean, this is absolutely fine, this is absolutely correct, but what is actually a bit missing, and as I said, this is what I have learned from my mentor, and what I know is, he always said to me, try to observe patterns, no matter if they are candlestick patterns or price patterns, try to observe them meticulously in detail. For example, this one, right, has a different size than this one right here. This is something. And then another thing is, even though both are bullish engulfing here, the shadow is a bit longer than this one right here. Yeah, that means there are more buyers pushing the price up, plus the size. That means people are somehow more convinced that this is the end of this is the end of this price movement right here. And there are also the previous scenario, right? The previous scenario is a different one. Here, it's a sideways movement. Here, it's a movement to the downside. And another thing is, when you use, for example, Bollinger Bands, this is the only indicator I use. When I use, as you can see here, right, this one is at the, on this side of the Bollinger Bands, and this one is in the middle of the Bollinger Bands. And here we have a psychological level. This has been mentioned, right? Abbas, you said it's at a, you talked about support and resistance, and here that's a 36, the 36 zone, it is a psychological level, whereas here it's just a support zone, etc., etc. There are so many reasons, and this is the reason why different reactions get triggered. It's not the case that patterns don't work, right? When people say, oh, candlestick patterns or chart patterns, they don't work, you have to read, you have to be careful and read and listen to fundamental analysis. Well, that's not true. The candlestick patterns, open a chart, you can test this every month on Friday, there is the NFP, right? So that means people are waiting for a piece of information, for a very important piece of news. That means open the chart, you will see that candlesticks, the previous candlesticks, they already tell you that a piece of, information is about to be released. The candlesticks, right, they already give you some sort of an information. It's not about necessarily just reading, it's not just about waiting for a fundamental or yeah, let me start again. Now, this is the reason why I do want to focus on candlestick patterns today, because there is so much more we can actually learn about candlestick patterns. I'm a bit nervous, as usual. So let me get started with today's program. Now, as I said, I want to focus on how to read and use candlestick patterns. Now, the very first one is, there are several tips I've listed here, and the first one is observe the body and the shadow, right? That means have a closer look at the body and the shadow. And for this, I actually have an example. Let me show it to you. This one right here. Yeah, this one right here. Can you see that? Yeah, if you can't, you can open the chart as well. It's the 27th of August. It's the daily chart GBP USD, if you can't see it. Now, wait a moment, I zoom in. All right. Now here, I've picked this example. Now, rule number one is observe the body and the shadow, right? Now, if you observe this body right here, as you can see, this is not a fully formed engulfing pattern. Yeah, it is not a fully formed. This is not a fully formed engulfing pattern. The closing price is lower than the opening price right here. So it's not a fully formed engulfing pattern. It's not a properly formed. This is information number one. This information usually, right, tells you that there is going to be some sort of trouble later on. Trouble can mean, for example, that you may have, or you may see price struggling at a certain zone, or you may see the price moving in a not very reliable way, etc. That means this is the first information. The second information is this shadow right here. It went lower than all the other shadows, but then it basically, yeah. So that's information number 2. Shadow went lower. That again means trouble, no matter what that is, right? And the trouble here actually happened in the form of, we are very close at a resistance zone. Yeah, we are very close at a resistance zone. Plus, this didn't get confirmed, right? This didn't get confirmed. You got 2 reversal patterns. So that means, you know, we were stuck in an ascending triangle. So the question was, is this breakout going to happen? Yes or no, right? So this already tells you there is some sort of a trouble to happen. Then rule number 2 is, let me switch to this one next. Yeah. Where does the candlestick pattern appear? And the same for, you know, where does the candlestick appear? That means the location is important. Is it in an uptrend? Is it downtrend? Is it a range-bound market? What is the overall sentiment? Where exactly does it appear? Because and I'm going to show it to you later on. For example, if a hammer appears in the middle of a newly initiated uptrend, this is a false signal, right? And this is also your task. You need to understand the difference between reliable candlestick patterns and the false signals. And I don't know about you, but it took me a while to understand, to see what is a false signal and which one is a reliable signal. Yeah. And then let me show you again. Yeah, let me show you again the same example right here. As I told you, the next question, number 1 is observe the body and the shadow. Number 2 is ask yourself, where exactly did it appear? And here, the question is, where exactly did it appear? It appeared in a sideways movement after an uptrend got initiated, and it appeared right after a bearish engulfing pattern. That means, you know, you are specifying the location. And then the next step is, the next question is, or the next rule is, candlesticks alone won't tell you where to enter or where to exit. Or to be honest with you, you know, it is a very good signal to understand where to exit, but usually not the best signal to understand where to enter. Now, what do I mean? I want to show you an example right here, right? This is what happened a couple of days ago, right? Now, that was on Wednesday, Tuesday, Monday. Now, Monday, Tuesday, when you see, let me show this to you. Let's say it's Tuesday today, right? Let's pretend it's Tuesday. When you see these 2 candlesticks, the question you have in the back of your mind is, it's not, you know, where can I sell? Don't plan your trades based on what you can see. But the question is, first of all, think about different scenarios. What can happen? What can happen after that? What is more likely to happen, right? So in this case, as I said, we had a breakout of this ascending triangle. A bullish flag was forming, right? Plus, we are at this was an important resistance zone. And later down here, we have an important support zone. Okay, so that means imagine a scenario. What can happen? Well, the next thing that could happen, as you all know, is these 3 rat crows, right? That means 3 rat candlesticks. That means the next one could be another rat candlestick. Or another possibility would be, what I don't expect is, you know, price to turn into, or what I don't expect is the next candlestick to be green. Why don't I expect that? Well, we had a breakout. After a breakout, it is typical that the price will move back to a previous price level. That means I do expect the price to come back to a previous price level, isn't it? That means I expect something with a long shadow, because I don't expect the price, or I don't expect the candlestick to turn into another thick rat candlestick, because that would be a very bad signal for me. Yeah, that would mean after the, when you have the 3 red crowns, that would usually mean that this is now somehow, or market participants decided to move down with the price. Yeah, you understand? So I mean, it could have happened, and I had it on my paper. I took it down that this could be a possible scenario. Yeah. So what I mean is, your trade is never, don't base it on a candlestick pattern, but ask yourself, what are possible scenarios? Then, as you all know, but I think everyone is familiar with the last rule, is it can always be an early signal of change or a warning for a potential change. And this one, for example, the next day, right, this yeah, it looks like a dragonfly, it looks like a doji, a small, and it doesn't matter how you call them, the names are not the important ones. It is more important to focus on the logic, the idea of all these candlestick patterns. What do they express? Yeah, based on these candlesticks, what type of price reaction can you expect? This is the more important question. And after this candlestick, right, we can all see that this is some sort of people are indecisive whether it may make sense to go down with the price or not. Yeah. So, and I see doji, no matter if it's a gravestone doji, a long-legged doji, or a dragonfly, doji means it's not indecisiveness, but it's like a question mark. Yeah, market participants are asking you a question. They're asking here the question: should we move down, right, with the price? That's the question. Well, there are a couple of no's because of a reliable support zone, plus we had a breakout of a chart pattern, which is very reliable, and a bullish flag was forming. So the answer is basically no, and price moves up. Yeah. So let's move on. Oh, wait a moment, I saw a comment. Amy, I have a question. Amy, I have a question. We now each market have particular characteristic, and I can see, do you vote? Yeah. Can you share what is the most behaved? Yeah. Exactly. Listen, this is also something that I have actually learned. My mentor always said, focus on, don't have a list of Forex pairs, but focus on 2 or 3. And this is what I do. I focus on GBP USD and Euro USD mainly, right? So that means, because the characteristic, you really need to understand the characteristic, and GBP USD is that, what I have noticed there is a market where you see a lot of fake outs, tons of fake outs. And usually when I see a fake out, I usually think, all right, now this may be a very good entry point, because this is the very characteristic of GBP USD, to be honest with you. Now let's continue with, well, this may be also an important point, actually. The things I am talking about now, you can apply them very well to GBP USD mostly, right? Mainly. They work very well there because, as I said, I have been focusing on that market for a very long time and not on multiple markets. I know what that means. I miss out on so many great opportunities, but at the end of the day, I think that works very well. Now let's continue with, and these are the candlestick patterns that occur quite often with GBP USD, and that's the reason why I picked those. Now I want to talk about Doji and Spinning top. Now, yeah, Doji and Spinning top. First of all, I just have a question. Let me see. Yeah, I have a question. Now, when you compare this doji to this doji, right? Which one is more reliable? I know the context, etc., but which one would you consider as more reliable, and why? Yeah, why? Ahmed. you have an idea? Or anyone else, but I feel like nobody's watching. Anyone, what would you say? Second one. Oh, okay. Oh, that was something else. Or Abbas, what would you say? Which one? It's just just a question to, because I do want to say a couple of things about Doji. Not sure. First one is more reliable. Can you explain why? Can you just give a quick explanation? Longer wicks, exactly. That's right. So that means we focus, when we talk about Doji and spinning top, or when we talk about all the other ones with, where you have like hammer or inverted hammer or the shooting star, etc. There, it is actually true that the shadow, the wicks are very important. That means not necessarily the color of the small body matters, right? Later on with a hammer, but it's more about the shadow, as you just said. Yeah, absolutely. And what I want to do now is I want to talk about dragonfly, and it's not. I see it everywhere, and I think I have used it today as well. And my mentor always got very upset. He said it's not indecisiveness. You could say that it's some sort of a question mark. And on the other hand, gravestone doji and dragonfly doji, they are actually reliable. It depends on the overall context, in the sense of, where exactly did it appear, right? And the cool thing is, in combination, they can mean actually a lot. They can be great entry points. And now, exactly, we were here. Now, the doji is usually reliable, or when it comes to GBP USD, right? And it's the same for Euro USD. It is usually very reliable when it appears in a trending market. As you all know, it's not necessarily very useful if it appears in a sideways market, but it is usually very useful if it appears in a trending market, and in particular when it appears in an uptrend, right? When you have an accumulation of doji, especially the red one, right? If you have, for example, a gravestone doji plus a long-legged doji together in an uptrend, that could actually signal a reversal. This could be a reversal pattern. And if the market structure is a sideways movement, or if it's volatile, be aware that this can be just a false signal. And in most cases, it actually is a false signal. And what I have also observed is that in higher time frames, and this is true for all candlestick patterns and also for all chart patterns, usually the higher the time frame, the more reliable. A gravestone doji is usually quite reliable at the end of an uptrend, and a dragonfly is usually very reliable at the end of a sell-off. Now, let me show you an example here. Yeah, right here. Oh, no, wait a moment. This one, first of all. Yeah, this one, I mean, as I said, the names are not important. This is somewhat like a dragonfly because of the longer shadow, a very small body. And so the color here doesn't matter that much, right? The color itself doesn't matter that much. As we can see, the question is, how has this candlestick been formed? If you observed on Wednesday, the GBP USD market, it was a quick sell-off and then a quick movement to the upper side. That means quick sell-off. Usually for GBP USD, a quick sell-off just means a testing of a support zone, right? And then price just goes back. And yeah, it is usually reliable if it appears at the end of a sell-off, and a gravestone doji is usually reliable at the end of an uptrend. Here, this is also a very reliable information. We have a long-lagged doji, a very small one, and then something like a gravestone doji. So one may think, well, is this going to turn out to be, you know, a reversal pattern? Now, if the opposite happens, and that's also a very important rule I have learned, is if you expect something, here one may expect a reversal, and then if the opposite happens, right, if the opposite of what you expect happens, this usually is a very reliable information, because this now means that price basically moves up, right? You were expecting, for example, a reversal you were expecting a reversal signal, and you were expecting the price to move down, right? This is what you were expecting, but the opposite happened. This is a very reliable signal to basically trade the movement to the upper side. You understand? Whenever the opposite of something happens that you were expecting, this is usually a very reliable signal. Like here, yeah, I wasn't expecting at all this candlestick to turn out like this, because after a bearish engulfing, I was expecting to, you know, the price to move somewhat down, maybe, you know, a rat doji, something like that. This is what I was expecting. And then seeing this showed me already, oh, all right, market participants seem to be preparing a breakout of this ascending triangle, right? This was the earliest sign that you could have used to understand that a breakout was about to happen. Okay, then I've got another example. Let me see. Exactly. Now, with a spinning top, you know, the moment you've got a small body, you would call it a spinning top. But as I said, the name is not important. It's more about, now this one is like a question mark, and this one tells you about the overall sentiment. That means here you have more sellers than buyers, and here some sort of, you know, buyers are entering the market, but it's very small, so they are not that convinced. You understand? This one is a question mark in the sense of if the price moves down, and then you have, let's say, 2 doji, right? In this case, that would be a question mark in the sense of the question would be, will this price continue to the downside? That would be the question, right? Whereas here, that's not necessarily a question mark. This is rather showing you that the mood, the overall sentiment on the market is actually about to change. Let me see. I had actually another example. Oh no, that's it. Yeah. Okay. Let me check if I said everything important. As we said, the shadows are in this case more important than the color. And if you have double doji occurring together, this can mean, you know, a reversal. This can mean basically a reversal. There was actually on GBP USD, there was a good example, but I don't remember when that was, because I do remember that I had entered because of 2 doji. Let me see if I can find it. It was on the hourly level. No, but you see, the color doesn't matter. If you have 2 doji, one is trying to push the price up and one is pushing the price down, plus the second attempt to move up failed, right? That was the first attempt, that was the second attempt. So you knew that price is about to move down, isn't it? Well, I can't find the example, but it doesn't matter. All right, now let's continue with the next one, which is a hammer, which is also a very important pattern that occurs quite often with the GBP USD market. Now, the question here again, right, is which one is more reliable? Which one would you consider as a reliable hammer? What would you say? Wait a second. Both of them. Ah, okay, this is not the question now. What would you say about this candlesticks right here? Which one do you think is more useful? What would you say? On the left. Oh, wait. I'm very bad at right and left. Here. Okay. This one right here, the green one, isn't it? Is this what you mean? The first green candle. Oh, yeah. Can I ask which time frame, please? This is just a silly, introduction question, just to move on with the next topic. It's not about the time frame here. Just in general, what would you? I know it's a silly question because I would also take into consideration the overall time frame. But what would you say if you see such a candlestick, the green one? So most people say the first green candlestick. Well, the thing is that, I mean, the green one is for sure a reliable one, because you've got, the only difference here is the body is smaller, right? And the shadow is longer. And that's the interesting part. So with hammers, or my experience at least, is that the longer the shadow and the smaller the body, the more reliable the hammer is. This is at least my experience. Now, let's see. Let me show you exactly. Let me show you an example. Yeah, now I picked Canadian dollar and CHF. I usually don't trade this, but I did it because someone once got quite upset because I always come up with, GBP USD. And so I thought I'd come up with something else this time, even though, as I said, I'm not an expert here. I never trade this Forex pair right here. Now here, what I want to show you is we've got a hammer, right? And the hammer is, I mean, we've got oh no, wait a moment. Yeah, exactly. Now here I have marked this hammer right here, right? I've marked this hammer right here, and this is on the hourly level. First of all, the higher the time frame, the more reliable. That means usually on a 4-hour level, it is more reliable than on the hourly level. But sometimes, right, we are looking for an entry point. What usually helps me is when what I always do is I either trade the either trade the London session or the New York session, not both, right? I either trade London or New York, and what I do is, before I decide what to trade, I have a closer look at the candlestick patterns. That means what has happened so far. How reliable are these candlesticks today, right? Yeah. Then what you have here, for example, this is a false signal, because this is right in the middle of nowhere, right? This hammer right here appears not at the beginning. It should be here, right? Because hammer usually appears, it appears in a downtrend, right? It appears on the bottom. It doesn't appear on the top of an uptrend, because in this case you would have a hanging man, isn't it, right? So a hammer should appear on the bottom, but here it just appears in the middle of nowhere, right? It appears in the middle of nowhere, which just means it is a false signal, and a false signal right here just you can't enter, right? Either you have already entered, or you wouldn't enter based on a false signal, or if you are stuck in your trade and you're not sure what to do because of this hammer right here, that just means it is not a reversal pattern. So price is expected to rise. I mean, obviously anything can happen on the stock market, but it makes it more likely that the price basically will continue up. This is something I wanted to say about the hammer. And just let me check. Yeah. For example, a reliable hammer is this one right here. But there was actually something else I wanted to say. Yeah, the inverted hammer, no. Let me see if I have marked anything right here. No, I didn't. Hourly level. No, I didn't. Okay, so that means there are also, the hammer needs to appear when you are, at the very bottom of a downtrend and you expect the price to reverse. In this scenario, it is a reliable reversal pattern. And what I have observed, I have no idea why this is the case. What I have observed with GBP USD, let me show you this. I don't know why this happens, but I don't care why it happens because I just want to earn money. Now, I don't understand. Imagine this at the very bottom of an uptrend, right? It would be very reliable to enter, etc. Now, what I have observed with GBP USD is not always, but in most cases, what I have observed is that usually, what I was back in time, I was trading Germany 30, right? Or even oil. And there, what I had as a scenario is with Brent oil, what I had as a scenario is when I had a long shadow, right? When I had a long shadow, price would move into this shadow and then basically reverse and then move up. With GBP USD, this usually doesn't happen that often. That means usually price moves just a bit into this shadow and then it just moves up. And this is something I have just observed for quite some time now. And this is also why here, when we had on the daily level, when I saw this shadow, I knew that it's not going to, walk into, or price is not going to test this area once again, but it's going to move up quite quickly. This is just, I have no idea, but this is somehow the characteristic of GBP USD, which can be annoying because you are waiting for the price to move down and then to enter very low. Yeah, but for some reason, it just moves up quite quickly, usually when you have, something like that with a longer shadow. But not always, but in most cases, this is what I have observed. Then let's continue with the inverted hammer. Yeah, exactly. Yeah. Let's see. Inverted hammer. Okay. Oh, yeah. What I wanted to say about inverted hammers. This is also something that I see. Oh, yeah. This is also something that I see before the London trading session with GBP USD so many times. And how you can actually spot them before. This is an inverted hammer, right? Now, this is an inverted hammer, right? We had a downtrend and then a sideways movement and then inverted hammer. That's the morning. Now, the funny thing is, when you open the chart a bit earlier before the London trading session opens, let's say an hour earlier, you will see that price moves quite quickly. And then usually what happens, or that happened to me quite often, that I was always thinking, oh my gosh, I'm missing out on a great opportunity, right? And whenever I have this thought that price is moving too quickly and I'm missing out on a great opportunity, in most cases, it just then ends up to, it just then turns out to be an inverted hammer. When I wait for the candlestick to finish, and I then see it's an inverted hammer, and that's a very great opportunity to enter, because an inverted hammer means people, a lot of people, they bought just too early. They were panicking. They just bought too early because of fear of missing out. Those traders got swiped out and you can now enter. This is I'd say, the best this is a scenario that happens quite often before the London trading session, that there is some sort of a panicking, right? Price just moves too quickly and you just think, oh my gosh, I missed out on a great opportunity. I can't enter the market now. And then you basically get this inverted hammer and you can basically enter. This is something I absolutely wanted to share with you. And then happening when price moved up. Yeah, this is something I said. And then the same, but in an uptrend, right? If you have the same candlestick, but in an uptrend, then you would talk of a shooting star. Yeah, this is the example right here, right? This one right here. And this was also a brilliant one. Price moved up, and then you had a first doji right here. And then price moved down a bit, and then there was a second attempt to move up, right? And then you had a shooting star, this one, right? And then you knew that this was it. You could either sell. I don't like selling with Forex pairs. I usually make money with buying. I usually don't sell, to be honest. And then price basically moved down, yeah? So, and what I have observed with shooting stars, yes, this is also something I wanted to mention, with shooting stars is they usually appear, this is a double, oh, my mouse, yeah. This is a double top, right? This is a double top, a first attempt and then a second attempt, and then price basically moved down. And usually what the shooting star usually occurs, well, it usually occurs together with this long-legged doji, with the normal doji, right? Together with that, it usually occurs together with that. And I have also observed that it usually forms a double top. This is the scenario, the most common scenario to me with GBP USD, and then it's very reliable actually. This is something important. Then let's have a closer look to the next one. Oh, oh, wait a moment. Let me see if there are any questions. No, there are no questions. Are there any questions? Sorry. I'm not a professional. I'm very bad at these webinars because I am usually, used to classrooms, to real students, seeing the students, etc. This is very difficult. I'm sitting in a room and just talking to you, but you're not here. You understand the struggle. Because usually I would see you in a classroom, I would see your face and I would understand whether you've got a question or not. Any questions so far? No. What else? All right, so now the most important thing today is these are actually quite important signals. These are like important signals in the sense of very good, entry points or exit points or early reversal signals for GBP USD. And what you have learned today, or what we have discussed today, maybe you haven't learned anything new, but maybe what we have discussed today is try to focus on the shadows rather than on the body. If you have candlesticks such as hammer or an inverted hammer or a shooting star, etc. Yeah, with all these candlesticks, try to focus on the shadow instead of the body. Try to focus on the higher time frame instead of the lower time frame, and try to ask the question about where exactly did the candlestick pattern occur. Yeah, clarify the question. This is the best thing you can actually do. Clarify the question of where exactly did it occur. The location is absolutely key, because the location will tell you whether it is a false signal or whether it is a reliable signal. And the color in those cases today, like, we had, as I said, we had the hammer. What else did we have? We had the doji, spinning top. We had the inverted hammer. We had the shooting star, etc. With those, the color doesn't necessarily matter. Yeah. All right, and to end today's trading session, what I want to say is, usually, you know, the key to success and the key to succeed at trading, it doesn't matter what your strategy is, right? Usually, people struggle with the psychological part. And what I've been doing this for many years, and this works very well for me. When you want to reach, or when you want to implement a particular habit into your trading routine, right? What you have to do is, you need, if you want to succeed at trading, right, you need actions that lead to success. That means what you can do is you can keep something like a habit tracker and write down on this side, you can write down all the actions you are going to repeat for the next 66 days, because it usually takes 66 days for an action to, you know, to turn into a habit. That means you can write down things like, I'm keeping a trading journal, I know how much money I can risk, I focus on taking small consistent steps, or I can wait, basically, right? I know how to wait, and I know what to do while I'm waiting for my trade, yeah? For an entry signal or for an exit signal. This is very important, and usually the key to success or to failure, or, you know, the path to failure, usually. That means tracking your actions, and, you know, after these 66 days or after 33 days, you can check and see what you can actually improve or what you can change, etc. This is absolutely very useful, yeah. Does the candlestick begin to become less significant? Sorry, wait, what? Does the candlestick begin to become less significant? I don't understand this question. What time frame? Sorry, I didn't read this one. What time frame does the candlestick begin to become less significant in you? Okay, now everything lower than 1 hour, even 1 hour is, yeah, everything lower than 1 hour is not reliable for me, right? Okay, and my trading style is I wait for bigger price movements. I don't trade the smaller things. So that means I usually wait for bigger price movement, like this one right here. Yeah, I waited for this and then entered twice, and then just after this one I had already closed it. Maybe too early, I know, but yeah, I usually wait for bigger price movements and not the smaller things. And if this is your trading style, in this case, I would also recommend to you to focus on the higher time frames, like 4 hours. 4 hours is great to understand what is the overall sentiment, and 1 hour is usually what I check when I'm looking for an entry point. But lower than 1 hour, I've never done that. I mean, I did in the past, but it never helped me. Oh, all right. Yeah, I see. Yeah, I do understand. Yeah, 30 minutes can also be useful, but it never worked out for me. I don't know why. Yeah. Exactly. And as I said, usually, you know, try to, if something is not working, maybe it's because of trading psychology. And trading psychology, this is my last sentence for today. Trading psychology doesn't mean motivational speech. If someone comes up with trying to motivate you, enhance your mood, that's rubbish. It doesn't work like this. Yeah, my trading mentor, he's a psychiatrist, and he knows how your psychology. He knows how to work with your psychology and how to change behavioral patterns, and he says it has nothing to do with behavioral, with motivational speech. Motivational speech is motivational speech, right? And you may need it or you may not need it, but trading or trading psychology means you need to analyze the weaknesses and the problems you still have, and then you need a solution and you need a plan, you need a strategy how to overcome these weaknesses, like with a habit tracker, etc. Or keeping a trading journal. Yeah. All right, this is it for today, and I hope it was useful. I am not quite sure, actually. I was also very nervous today. I have no idea, even though I took loads of notes, right? I hope I haven't forgotten anything important. And yeah, so this is it for today. Make sure to like this video and to subscribe to A1 Trading. They offer so many great opportunities for you. I'd say this is the only source I could ever trust when it comes to trading. A very reliable source for you to broaden your horizon, to learn something new, etc. So it was a pleasure with you, and it will be even much better to see you right here, like in a classroom, because this one is really difficult. And yeah, so thank you very much indeed for all your support, and thank you very much indeed for listening, and hope to see you very soon. And take care. Yeah, take care. Bye.
Thanks guys for watching today's show. I hope you got some form of value out of it. Make sure if you're new to the channel to hit that subscribe button down below so that you can get more free trading content with us here in the future. And also, if you're in the market for a broker, we've got some recommended brokers listed down below in the description. You can check the links there. It'll take you to pages where you can read up on the broker. Make sure to do your own due diligence if you'd like to sign up with any of these brokers. But again, some of our recommended ones are down below in the description. Thanks very much for watching today, and we'll see you back in the next one.